In today's video, I tell you all the details about a Bitcoin strategy that you can try out anytime. Now let's start the video. So we will need two exponential moving averages for the buy entry rules and one ADX. The numbers are the following. First, we will need 105 exponential moving average, and then we will need 140 exponential moving average. Now I have to tell you that if you like this kind of format and these kind of videos, subscribe to my channel, because that will allow me to make more videos and put even more effort to the videos that I make. And at the end of the video, I will show you all the statistics for the 4-year period that I tested this strategy on Bitcoin USD. That will be really interesting. So let's start. Now, when the 105 period exponential moving average crosses above the 140, we have our first condition that we can take and write it down, that our first condition is good to go. Now, of course, we have a second condition, a confirmation indicator, in other words, that is really important. Our confirmation indicator is an ADX. It is a 14 period ADX indicator, 14 period length and 14 period smoothing. And our second condition is that when the crossover happens, our ADX value has to be above 25. So our confirmation here is perfect because it is above 25 here. As you see here, it wasn't that good, and here either. And it is important to follow all the rules of a strategy, even if you think that you found a bottom or a top and you want to trade, because systematic trading is the only way to go. And if you can't follow your own established rules, you will fail in trading. So we followed all the rules, and the crossover happened. The ADX was above 25 and we could take the trade. It turned out to be a very, very good trade, and it is a really good old school trend trading opportunity. And on Bitcoin, I think this is the way to go. This strategy does buy and sell trades as well, so not only long trades. As you can see, it does really well, and I will show you the exit strategy because that is just as important. In my opinion, in most cases, it is even more important than the entry strategy. And it is because if you have a great entry strategy, but you don't have a great exit strategy, you fail. But if you have a not that good, let's say, not that good entry strategy, but a good exit strategy, you can still make money. So at the end of the day, exit strategy is the key. But of course, we want to enter the market at the right place too. So the exit strategy is the following. We will need a 35 period EMA, and we will need a 200 period EMA. Yes, and I will show it to you, because we can close the trade if the 35 period EMA crosses above the 200 period EMA. Now, I have to tell you, if you take a look at it, it is really nice because it was the first time since we entered the market, so it is really good. And I just want to tell you one more thing, that the trade, this particular trade, was more than 1 million pips, Of course, BTC is a insane volatility asset, so it is not that surprising, but compared to Forex or even metals, it is pretty insane. So the next filter is for the dynamic exit is that you have to wait 1100 minutes after the entry to actually start to look for the dynamic exit crossover. Of course, here it already passed multiple times, so it is a great exit for all if you consider all the parameters. And it is important to say that you have to use a safety stop loss. Now this trade is approximately 1 million pips, and it is even more than 1 million pips. So our safety stop loss will be set accordingly, of course, because in Forex this would be an insane amount of stop loss that doesn't make any sense even with metals. But for Bitcoin, where you have 1 million pips movements, it makes sense. And actually we will be using a 200,000 pip stop loss. It's a safety stop loss. Even with this stop loss, our risk to reward ratio is more than 1 to 5, and that is insanely good. So you don't have to worry about that crash happens or anything, that all your money will be gone because of Bitcoin's movements, because you are using a safety stop loss. That is really important to every strategy. When we trade, the markets are all based on statistics and probability theory, and it is really important to look at them as realistic as possible and don't hope and these kind of things. Just look at the data. The data shows there can be crashes, crisis situations, every kind of situations. So you have to use a safety stop loss, that's all. Most of the time you won't be using it anyways, because this strategy is a buying and selling strategy, so we don't just buy into the hype. That is really important as well. Now I show you the sell entry and exit rules, and now we will be taking a look at a short trade. First of all, what we will need is two EMAs, two exponential moving averages. The first is a 55 period EMA, and the second is a 170 period EMA. Then we will need an ADX that is not so commonly used, but it is a 36 smoothing and 36 length ADX. Now our rules are really simple. Basically, when the blue line crosses below the red line, so the smaller EMA crosses below the bigger EMA, then our first condition is good. And our second condition is when the ADX is above 25, as we did with the buy trade, but with different periods, and that is really, really important for the sell trades, because Bitcoin behaves really different when it is in an uptrend or in a downtrend. And this is why most people can't trade Bitcoin in a downtrend, because it is so different. And the crossover happens here, and our ADX is just above 25, but the key is that we could take this trade, and this turned out to be a really, really profitable trade, so I hope we could take it. Now let's see what are the exit rules for this particular trade. So the exit rules are the following. We will need two EMAs. The first EMA is basically a 30 period EMA, and our second EMA is a 60 period EMA. One more thing that is really important, that you should always use a safety stop loss for sell trades as well, and they will be 90,000 pips, and an X minutes parameter that will be 3000 minutes after the entry. Now let's take a look at it, because the crossover just happened here, and it was a perfect spot because the 3000 minutes passed, and so basically we could close the trade. And with these time parameters, actually a lot of noise and ranging markets can be filtered, and that is what we are looking for in a strategy. I want to tell you that I am planning many more strategies that are more complex and have many more filters that are helping to avoid ranging markets. And I hope you enjoyed these more simple strategies as well. And now I show you the statistics. So here we are at the statistics of the strategy. And as you can see, and I already know that many of you say that just buy and hold and stuff. And the thing is that it has a 17% drawdown. Now, I know that everybody is a millionaire from crypto trading, but I would say most people's drawdown is 100%, if not more. So I will just leave it at that and tell you the data. So the average profit trade was much larger than our average loss trade. That is great. That's what we are looking for, because most people buy, then grab the money and run, or and after that they open new buy trades. But when Bitcoin or anything else basically starts to go in an opposite direction, they move their stop loss, and then they lose all their money, much I would say bigger amounts than when it was a profitable trade, because they think that the market will go up again, and basically they lose even millions of dollars because all their savings because of that. That is not good. So what I want to tell you is that when you have a good risk to reward ratio, that is security that you need in trading, compared to a scalper that has really bad risk to reward ratio and will fail 100% of the time. And if you combine this kind of risk to reward ratio to this kind of risk to reward ratio based on the largest profit trade and largest loss trade, this combination tells something. And with the relatively low drawdown, it is not the lowest, but it is not that high. And you can take a look at this, all the statistics. It is pretty interesting. I showed you the chart, and it looks like this with 99.9% tick data, and of course the spread and the slippage and all kinds of these things are calculated in the test. I hope you enjoyed this video. Ciao.